Good morning, everyone, and welcome to the Vetiva breakfast meeting brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. Today, we'll get the usual rundown of the equities and fixed income market from our traders, and then we'll conclude with headlines from across Africa brought to us by our media partners at Frontier Africa Reports. Once again, we'd like to remind everyone that the meeting is being recorded and the audio file may be shared with third parties. It's also being streamed live on our Vetiva online Facebook page if you'd prefer to view or join from that platform. The session is set to last for 30 minutes, inclusive of Q&A. And if along the course of the session you have any questions for our speakers, you can send them in using the chat function available on Zoom. And if you're joining us from Facebook, you can make use of the comment section. However, we'll be having a Q&A segment, and if you'd prefer to speak, you can make use of the raise hand function and you'll be given an opportunity to speak. We'll now be starting off with Simbiat from our Global Equities desk, and she'll be taking us through some markets from across West Africa. Good morning, Simbiat.
Good morning, Victoria, and good morning to everyone. So like she mentioned, I'll be doing a quick recap of yesterday's market activities across West Africa. And I'll be starting in the BRVM market, where the index gained 31 basis points, largely due to significant gains recorded in the BRVM agricultural index. So the sector advanced by 4.28% due to local demand for palm Cote d'Ivoire and Cypriot, as both counters gained about 7% yesterday. We also saw Nestle and SOGB Cote d'Ivoire continue its uptrend. For activity level, market saw a 103% improvement in total volume traded, with the likes of ETI and Tekobo recording the highest volume of trades, while turnover also inched up by 2%. Going into the last trading session of the week, we expect the market to close positive. However, we do not rule out the possibility of investors starting to take profits on some recent gainers. In Ghana, the market continues to trade on a muted note as the index remained unchanged for the third consecutive session. So yesterday's session ended with zero gainers and losers, while MTN Ghana accounted for 99.96% of total traded shares. So basically, taking the MTN trades out, it was a very quiet session. And we believe the markets will trade in a similar pattern with names like MTN, Enterprise Group, and Cowbank trying to elevate market activity. So like we've always mentioned, for any of our listeners looking at exposure at any of these markets, they can send us an email at dealing@vetiva.com or to our sales team at sales@vetiva.com, and we'll get back to them. Finally, in Nigeria, we have seen the index continue to move north, gaining 110 basis points yesterday. The sector that contributed the most to the positive close was the industrial goods, which gained 216 basis points solely on the back of renewed interest in Boa Cement. Other counters that closed positive were NGX Group, which was up 9.79%. So for this counter, it has gained significant traction, mainly because it's newly listed. And we saw a similar trend happen when it was listed on NESD as well. So it has returned about 32% in terms of price appreciation since last week, Friday. For the consumer goods space, we had Nigerian berries and Dangote Sugar both gaining points, while in telecoms, both Airtel Africa and MTN closed positive, with MTN recovering back to the 174 levels as strong valuations continue to support demand for that counter. Despite the positive close, activity level trended down, with volume declining by 56%, while turnover fell by 32% as market breadth stayed positive. So despite the bullish sentiment in some selected names, like we've seen recently, we've seen recently in FBN, the rally we've seen recently in FBN, overall market sentiment has been somewhat lukewarm amid reduced foreign participation, even as we approach the end of the year. And we all know the major concern for this has been FX challenges and uncertainties as to what rates they will take out their funds. So basically, we've seen foreign investors interested in fungible stocks like Seplat and Etel, so they can take the funds out. And recently, I've also seen them interested in names like GTCO and WABCO as well. Going into today, we expect the market to trade mixed, with the possibility of closing the week up, barring any significant price dip in any of the large cap names. And that'll be all from the equities desk. Thank you.
Thank you very much, Simbiat. Next up is Omorege, and he'll be giving us a review on the fixed income market and currency market. Good morning, Omorege.
Good morning, everybody. System liquidity improved significantly to open at about 67 billion positive yesterday from the 71 billion negative that was recorded on Wednesday. Despite the improvement in system liquidity, interbank rate tightened by an average of 50 basis points on the back of increased funding pressure as players had to make provision for the OMO auction debit. As a result, OBB and overnight rate closed at 15% and 15.5% respectively. For today, we expect interbank rate to trade at higher levels as players make funding provision for the bond auction settlement of about 192.76 billion and a possible CRR debit. The parallel market lost about 2 naira yesterday to trade at 575 naira to a dollar, while the earning window opened at 413.94 naira to a dollar. The highest trade that was recorded yesterday was 424.45 naira to a dollar, while the closing rate was 415.07 naira to a dollar. Brent and WTI gained 0.3% and 0.2% to open today at 84.85 and 82.70 dollars per barrel amid the tight oil supply in the market. The T-bills market traded on the muted note yesterday with bearish sentiment seen on the short to mid-dated maturities. We observed continued interest on the long-dated papers, especially on the 11th August 2022, 25th August 2022, and the 13th October 2022 maturities, while trades were majorly consummated on the 28th July and the 8th September 2022 maturities. Overall, average benchmark rate increased by about 35 basis points to close at 5.2% levels yesterday. The OMO market traded on a muted note as market participants focused on the outcome of the OMO auction that held yesterday. At the auction, the CBN sold a total of 30 billion from an offer amount of 30 billion across the three tenors, while maintaining marginal rate at 7%, 8.5%, and 10.1% respectively. The bonds market traded on a relatively active note yesterday with bearish sentiment seen along the mid to long end of the benchmark curve as players tried to take profits on their auction winnings. We saw activities majorly on the 2036 and the auction papers as the 2026, 2037, and the 2050 maturities, while trades were majorly executed on the mid to long end of the benchmark curve, particularly on the 2035, 2037, and the 2050 maturities. Overall, average benchmark rate rose by about 10 basis points to close yesterday at 12.11%. The Eurobond market traded on a very active note yesterday as investors continue to reinvest their cash from the Access Bank 2021 principal repayment. The corporate maturities that enjoyed the most action yesterday were the Access Bank PEP, EcoBank 2031, and the Fidelity Bank 2022 Eurobond. In the sovereign segment, interests were majorly seen across the curve. Fidelity Bank launched its 5-year Eurobond yesterday at a rate of 7.875%. The total amount that was sold was about $300 million, while the total subscription that was received was almost twice the amount that was sold, which is about $575 million. For today, we expect the current active sentiment in the bonds market to persist as market auction winnings, while we believe that the TB's market will continue to trade in line with the level of system liquidity. That'll be all for fixed income. Thank you.
Thank you very much, Omorege. We have now come to the Q&A segment. If you have any questions for our speakers, you can send them in using the chat function available on Zoom. If you're joining us from Facebook, you can make use of the comment section. However, if you'd prefer to speak, you can utilize the raise hand function and you'll be given an opportunity to speak. We already have a question in the Q&A box, and it says, Business Day Online published yesterday that 3 major banks debited their customers at 600 naira to the dollar. Why is this? And what's your view on the volatility of the exchange rate? Will it deteriorate before April 2022? I'll direct this question to our fixed income desk.
Okay, good morning, and thank you for the question. So basically for banks, it depends whether this is a card spend or an actual spend, but this is more a card spend. And what you see for banks is card spends continue to grow in times or periods like this because people abroad will typically want to use their Naira cards to make withdrawals abroad or pay for things. And as we all know, we are just coming out of a resumption phase. Students abroad resumed in about September, basically. So you see a much greater chunk of people trying to spend from Naira cards and trying to find their way in new systems. Given that banks' exposures continue to grow, one of the ways in the past and what typically banks will do in the past will be to first, and we'll all get those text messages often, reduce your limit. And if that isn't doing justice to the objective, then they hike the rates on the dollar cards, basically to discourage people from using those cards. So that's pretty much why that would have happened. Again, exchange rates becomes the big elephant in the room for all of us. We've continued to see reserves continue to grow, but again, the demand for dollar continues to outweigh the supply that we currently have. It will be good to observe the market and see whether there's some new strategy or there's some way the CBN might be exploring to pump in supply since the reserves are growing. Again, from stronger oil prices, again, from the Eurobond issuances we've had in recent times. I will continue to hear the Minister of Finance say that the country is, despite the other side of things, the country is happy to again tap the Eurobonds market. It will be good to see if there will be any benefits that attribute to that towards the year end. From the peaks of what we saw in rates in September, that's moderated a bit from the 590 levels to about the 570 levels today. So it's not crystal clear what we'll see towards the end of the year into Q1. But one thing remains very clear, that if nothing is done, it remains to be seen what rates will do in 2022 and in Q1. Bear in mind that we're going into an election year, and we know the trend with the dollar with politicians when it comes to an election year. So whilst we want to see what happens in the short term and to be able to have a stronger guide as to whether we see an appreciation or things go negative, if we don't see anything in the near term between now and December, then the view is that given the demand that will come from politicians doing their things, we'll most likely see something worse off in 2022 if the CBN does not act very strongly to tame things at this time. That would be our view.
Okay, thank you, Dapo. This is a follow-up question on the Q&A box, and it says, good morning. Following up with the earlier question, we have seen recent accretion in the external reserve up to $40 billion, but we have not seen as much gain in the parallel market as it remains sticky. When are we likely to see gains as expected based on CBN's policy?
Okay, thank you. So I sort of spoke into that a bit when I answered the earlier question. We've seen a bit of appreciation. I think in September, the parallel market peaked at 590 levels, and today is at 570. September was due to the combined impact of the issues around supply, again, banning BDC, and then students going abroad resuming, what's the word now? The non-full allotment at auctions, basically for FX. So yes, we've seen some appreciation, but I think the word is maybe is not what the market expects when you see we've raised the euro bonds that the whole market has made noise about, and still yet we are not seeing strong appreciation. I think the challenge remains the supply mechanisms to the market. We have taken out and the issues have been, permit me to use the word of a flog. We've taken out a lot of things from the official market, and the things that even at the official market are unable to get full allotments from what we gather. These things have to go to the parallel market because, again, the average Nigerian, what we consume is largely imported. So until things are able to get to meet their full demand or the full effects they need at the official windows on their LCs and, and payment obligations in the international space, trade finance, basically, we'll continue to see that pressure. So no matter what the gains we see, if we don't manage that supply mechanism, if we don't reduce the pressure of the parallel market and bring things back into the official space, these pressures will continue. If you permit me, if you recall that when the INA window was first created, at some point we saw stronger action. The parallel market appreciated. There was no incentive to even go and trade in the parallel market because the other side of the official market felt now we have a market for us and things are trading closer to where it should be or about where it should be. So we saw that there was a supply mechanism that worked effectively at the time. But today we don't seem to have an effective supply mechanism that's bringing the price of that's giving us an accurate price for demand and supply to match things. So until we figure that out, we might not see strong appreciations. I want to believe strongly that the CBN will be looking into this, and we are hoping strongly that we start to see some things in that regard, knowing fully well that the capacity to even defend is now stronger, given the growth in reserves. I hope that answers the question.
Thank you very much, Dapo. We have now come to the end of today's session. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we thank you for joining us today, and we hope to see you in tomorrow's session. Have a great day ahead and good morning.